We are here. We are here. We are here. One is amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP USD. We are in a 12-month time frame. Price action last candle to right hand side is a small bullish green doji. Is within the second last candle, coming from a spike down to a low, maybe pushing up with some momentum, but we know we had a consolidation of that low area. Take a look at current price. So price action is sitting at 1.22897. So if price work is way up, we're looking for price to reach that high of that second last candle body, nearing the numbers of 1.35073. Before making it there. If it makes it there, it can tag the midpoint within that second last candle, nearing the numbers of 1.27786. And if price action decides to draw back and drop down, it can drop down back to the areas, at least structure of support of the second last candle body at 1.2779. Anything within that area is consolidation. So we see price action is in the low area of the second last candle, consolidating as a doji. So we want to see if that market's going to be respected to push up. It may or may not. The reason why is because that second last candle is a spike down to a low, and we have a multiple spike downs to a low. So we can see if we go back a little bit. Let's go back towards this previous area here. When that market did come down for that spike down once, came back up, solid push down, came back up, spike down to a low with the second last candle. Now, is this the price action is going to push that market up and eventually out of that area? And we can see that W formation that's being formed. Working our way down to the 6-month time frame. Price action on the 6-month time frame is reading as a same candle as before, bullish green doji. More of a spike down to a low, so we can see that that market may be respecting that area of support with the long wicks down to the bottom, with the price action compared to the top of that wick of the price action. Second last candle definitely has a long wick down to the bottom, identifying loss of momentum and maybe identifying a reverse eventually coming up. So let's take a look at what's happening with the price action second last candle. Zoom into that area. So if you take a look at price action, we have price action body, which is price, is above the previous candle body, and price action wick is slightly above the previous candle wick. So it's an incline in there. You can see that the support is lower than the second last candle. Support leg is lower than the wick of the price action. So that's identifying there's a incline at the bottom. Let's push this out. So we can see that there's an incline coming from the bottom that's working its way up. There's a slight incline within that area. So it could be reading as a W formation or some type of break and retest as we walk down the time frame. Walking down to the 3-month time frame. So we have price action as a bullish green candle, spike down to a low doji style. So it's identifying support and support with the third to last candle in the market. And we did say maybe identifying a retest, and the reason why is because the second, third to last candle has spiked down to a low, market pushed up out of that area with the second to last candle, and then came back to retest with the price action candle. So that's a break and retest. As we can see, we're going to see if it's going to follow up a bullish green candle to follow up behind that, or is this candle going to create that momentum for the push? We're going to wait to the monthly time frame. So price bullish green candle. So price second, third, fourth to last candle is all retest candles. Just retesting that SR line that we created, is sitting on right on top of that multiple times. Did break a few times, but it's area of consolidation. So if we was reading the market on the monthly time frame and we thinking that the market's going to push up because of the multiple spikes, and we did see the break, price action third, fourth is the retest areas, though. So that can be identifying for a market came down for that first leg, second leg, price second, third, fourth overall retest, and we look for a candle to engulf the if this price action that's going to engulf the previous candles, the second, third, and fourth, then we'll see that push out of that W formation. Working our way to the weekly time frame. So price action weekly time frame, bullish green candle. Lost a little bit of momentum. It's still active. A little bit of a long wick up to the top, so it could be coming back to retest unless another candle is following up with the bullish green candle. So what we're looking for price to head to is the next level of the high, which will be the left hand side. So we're looking for price to head to numbers of 1.23921. And once that market, because it's tagging that area, and the reason why is that price action is tagging the area. So if we take that market and we say, hey, we're going to take the SR line, we're going to put a zone around that SR line, we can see that market is doing a solid touch. So what that market could be identifying is basically how many touches to that top of that resistance that we see overall, first, second, third leg, fourth leg, retest, and it can drop down with a bearish red candle. It could drop down with a bearish red candle and then be identified as a double top and retest or triple top in that area. So we just got to wait for that market to identify itself, at least another bearish red candle or breaking retest about the zone or above the zone. So you look for the breaking retest or above to work its way up, unless you believe that price action can follow with bullish green candles or this active candle can push up further to fully break out. Working our way to the daily time frame. So price action daily time frame reading as a bullish green candle, spike up to the high. So what's happening with price in second is doing a retest of that area twice and also identifying that it can be losing momentum. So in that area, think about solid green and red to the high, which will be identified first, second leg for the retest. So that will be, once again, fourth leg is a push, third candle is a retest. Price in seconds to push up to the high, which tapped that area for a double top at that high, lost a lot of momentum with the candle, and it can just drop down with the bearish red candle. So as we walk down the time frame, it can be reading as a double top, and the market spikes down, or maybe a triple top or quadruple top, because we have red and green for a single touch to the left hand side, but we have a double retest, so it could read as 4 touches to that top and then drop down, depending on how it looks on a lower time frame. So we'll take a look. 4-hour time frame, let's see what it looks like. So 4-hour time frame is reading as a type of double triple top. So we can see that market spiked to that area, first leg, second leg, third leg. So it's reading more as a double top. So we're trying to pay attention to what's tagged that zone area. The candles that are tagged that zone area is a price, second, third, fourth, fifth to last candle in the market. So is reading as a first, market came back down, came back to retest with the second last candle, and market's pushing down. So it's a double top being red in that area. So we're looking for that market to, so we break that down in sections. So we know that price action low will be this area here nearing the numbers of 1.22386. And we can see that we have the midpoint with price action just tagged, or at least a candle tag below that wick, and had a bit of a pullback, so it can be respected. And if so, it can head back up to that area, that high, which would be the resistance. So identify as first, second, third, fourth, retest, market push up, unless we receive that consolidation in that area. So that means we're looking for that market to break out to that high, which will enter the zone. You can just wait for the market to break out the zone, unless that market works its way back up, down towards that next area of support, and it can still follow up with a push up unless it drops down to the following level, which will be near the numbers of 1.21905. It still can create some momentum, and if so, it'll read as an overall double bottom for that first, second, third. It could still spike down for that support before working its way back up to that zone. So basically, we're waiting for that market to identify a pattern in that area to see what it's going to do. So far, we have a retest. Is it going to push up with a bullish green candle and follow up, or is it going to break through? Okay, guys, this is Cam Jones, FX, GBP, USD.